Good afternoon and welcome. We're so glad that you're joining us today for Community Candor about filling tax, learning resources about being tax prepared. I am always excited to be able to join you along with these professionals and great individuals that we have over here at Communities First, and with people in your local community that's working in government, that's working in community. We have a lot of experts here, and I'm not going to speak to that. But what I am going to talk to you about is why Community Candor is here, and also just a little bit about Communities First. But Communities First, I am Glenn Wilson, the president and CEO of Communities First, and co-founder. And Communities First has been around about 10 years this past year. So we've been around now a decade, which is awesome. And I'm so happy that our organization is continuing to thrive and not die, especially in the time of COVID. But the reason why we're able to do that is because we have great team members, we have great volunteers and great supporters that allows us to do this work each and every day to be able to impact the community in a great way. We focus on 4 areas: affordable housing, economic development, arts and culture outreach, and environmental education. And today, this is about our economic development arm, as far as us making sure that there's economic opportunity for people in the community and also small businesses. And I am just so excited because last year when we were going through COVID, we were having a conversation internally, and Renee, our director of special projects, that just got a promotion, but she's been doing awesome. But Renee was, hey, we're getting all this information from the community. People were reaching out to us, and we said, well, what can we do with all this information to make sure that we get it out to people, get it in their hands, but also can give it to them in an accessible way. So let's try to find ways and opportunities and speakers to put together that can talk to people, everyday people like you and I, about how we can actually best situate our financial situation for the future. And so that's where Community Candor. So this is the opening of Show Me the Money Day. This was sponsored today by TCF Bank. So we greatly appreciate their support. And what I'm going to do is pass this over to the awesome moderator, our director of special projects, Renee Kent, who has worked to put this series together. And we're just so excited to be able to kick off 2021. So do me a favor, do us all a favor. Do not sit there and just watch this yourself. Pick up your phones if you're already looking at it, or go over, if you're on the social media platforms, YouTube or LinkedIn, click the share button. Click the share button, and then also engage with us. Ask questions as things come up. Just pop the question in there. We'll be able to get to you. But like I say, share, and we're so happy that you're here with us today. So Renee, it's off to you now. Thanks.
Thank you, Glenn, and welcome everybody to Community Candor, our session entitled Feeling Taxed, Tax Preparation Resources. We're so excited to be back here, as Glenn said, and Happy New Year to everyone. Thank you for joining us. So let's go ahead and kick this off with some introductions. I am Renee Kent, your moderator, and also special projects director for Communities First. I have a background in accounting and spent the last 20 years really focused on
All right, it looks like Renee is frozen. She will be back with us in just a few minutes, but we can go ahead and get ourselves started with some introductions. So if we could have Antonio introduce yourself.
Hi, everyone. This is AC, the CPA with John L. Financial Services. We are excited to be here today with you to talk about 2020 tax changes? Are you feeling tax preparation services? I'm excited to be with you all today. Thank you.
All right, Troy, and if you could introduce yourself for us.
All right. Hello, everyone. My name is Troy Milton. I am the Tax Services Manager of the Wayne Metropolitan Community Action Agency VITA Tax Program. I'm excited to be here with everyone and share some resources. We believe there is a tax solution for everyone, and Wayne Metro is one of those solutions. So thanks, everyone, for joining us, and let's have a good time.
Looks like we've got Renee back.
Sorry about that, technical difficulties.
It happens, right? That's the world that we're living in. So we just did introductions, and I'm going to let you go ahead and take it away.
All right, great. Thank you. So sorry about that. Let's go ahead and jump into this session. Before I get started, I'm not sure if it was mentioned, but I want to make sure that everybody knows if you have a question, please post it in the comment section. We will be checking those and addressing them throughout the presentation. So make sure you put your questions in there. And also, we will be posting a link throughout the session with a survey that we would love for you to fill out. Everyone who fills out that survey will receive a special gift from us, and there will be a drawing so that one individual will actually receive up to $125 to cover their tax preparation services with Mr. Brown. So again, look for that link in the comment section for the survey. Please fill that out and also post your questions. And I'll also mention that again as we go along in case you missed that. So, are you feeling taxed? Tax season does not have to be stressful. If you take time to prepare, it can save you time, headache, and money. And so today we've got this great panel of guests who are going to discuss who has to file, should you do it yourself, should you engage a preparer, how can you file for free, and also what changes you should be aware of when filing your taxes this year. So we'll start off with Antonio. If you could tell the guests what or how does an individual know if they're actually required to file taxes?
Sure, that's a great question. Typically, if you so there's a requirement to file, and then there's actually filing, and really what your tax return is a reconciliation of the income and expenses that you incurred in the prior year. So that's what the tax return is. It's a reconciliation. So if you're required to file, typically if you have earnings of greater than $12,000, which is to tip if you're single, $12,000. If your income has exceeded that, whether you worked a job or something like that, you're technically required to file if you have earned income. For senior citizens, people over the age, there may be some requirements to file for your Social Security, pension, etc. But typically that threshold for singles is $12,000. The caveat to that is if you were self-employed, so you got a 1099, you were an independent contractor. The reason why you have to file that is because if you had not had taxes taken out for income taxes or self-employment, then you have to reconcile that with the IRS. And so there may be some self-employment taxes that you may actually owe. So those are the requirements typically to file. If your income is greater than $12,000, then the IRS is going to say there's some possible income tax. There's some possible income tax liability there. So $12,000 typically seems to be the threshold.
Okay, all right. And if our viewers have more questions about that, or if they're unsure, I just want to guide folks to irs.gov. You can actually go on there and there's an assessment where you can go through and see, based on your situation, if you have to file. You have to plug in some information, and it'll shoot out the answer whether or not you're required to. And just another note, even if you're not required to and you're owed a refund, you never want to leave that money on the table.
Right. Yeah. Yeah.
Yeah.
So go ahead, Troy.
Oh yeah, I was just gonna say, I think it's important to let taxpayers know that just because you don't have a filing requirement sometimes it's still more advantageous for you to actually file a return, because you can be eligible for some federal credits and definitely some state credits. So you should definitely seek the advice of a tax professional before you just decide, not to file. Also, he mentioned age with seniors, and I can't tell you how often I have people come in and say, "Oh, I'm 96. I thought when I turned a certain age, I didn't have to file anymore." And I'll say, "Well, Miss Johnson, you made $86,000 this year between your pension, your capital gains, your Social Security. Like you have a tax liability, and you owe this year. So that it doesn't matter how old you get, you still can be required to file. It's based on your income, not your age."
Right. And I'll also add this to the conversation. The tax return is typically one of the requirements if you're going out for a loan, whether it's a loan for a house or whether it's a loan for a mortgage or auto loan. Typically, they want to see those tax returns. And then what happens is that tax returns becomes proof of income in addition to other statements like your W-2s or your 1099s or whatever have you. So you may not be required to file, but it's probably in your best interest to file.
Yep. As well as student loans. I can't tell you how often people come and say, I do a lot of amendments because people will file fraudulent or incorrect returns. And when their, child goes off to college and applies for federal student loans, they say, "This isn't right. You filed as single, but you're married. You should have filed married filing joint or married filing separately." And they have to come back and amend those tax returns. And a lot of times they owe money because they filed incorrectly. So
yeah, absolutely.
Those are all great points. And I just have another question. So if you're required to file, and let's say you owe money or you just don't feel like it, whatever your excuse is, and you just decide not to file. Can you talk about what the implications are with not filing when you're supposed to?
Sure. Not filing with the IRS when you're required to file, meaning you made income that you were supposed to report to the IRS and you failed to report. That's borderline tax evasion. Okay. And tax evasion is a federal crime. Tax evasion will land you in jail. So, and then there's just other interests and penalties. One of the tools that the IRS has is if you haven't filed, so that W-2 that you get from your job or your employer, that W-2 gets filed with the IRS. So you get a copy and the IRS gets a copy. That information is put into the IRS database. And if you don't reconcile with the IRS has the ability to estimate what your tax liability should be based off of not giving you credits, et cetera, just your base income that was received to them. If they don't have that information, that reconciliation form, that tax return, they can assess you and then charge you interest and penalties, and possibly audit you. So it's important that you file not only a tax return, but file a timely tax return to avoid those interest and penalty fines and fees, and borderline tax evasion if you go years and years without reporting income that you should have reported.
Yeah. And AC, I think it's important to also let them know that not only W-2s, but for those people that are contract employers, a 1099 miscellaneous, that also still gets filed. The IRS knows about that income as well. So you may think, well, I'm not a technical employee of this company, so I don't have to do anything. But the IRS knows that company had to file that 1099 miscellaneous with the IRS as well. Same thing with the gig economy, Uber, Lyft, DoorDash. A lot of people are doing those things right now.
Yeah.
That paperwork is filed with the IRS.
Yeah. And we had millions of Americans on unemployment this year. And unemployment is required. It's a taxable income. It's taxable income. It may not be considered earned income, but it is taxable income. So a lot of people will start getting 1099-G, which is the government tax form. Those forms will be used to file your 2020 tax return.
Yeah.
That's a great point that you bring up. And so let's talk about actual filing. We know we have to file if we're required to, but can we do it ourselves, or should we engage help? What do you suggest as a professional tax advisor?
Troy, you want to handle this one?
Sure. I think it's a multitude of options out there for everyone. And I think you need to really look at your tax situation and make the decision that's best for you, whether that be going to a paid preparer or a CPA like AC, contacting a tax professional that you can go out. They have a certain set of fee, and they will prepare your tax return to you, give you great tax advice, keep you legal, and things like that. If you are a person that has a more simple tax situation, like a single person, no kids, just work one job, W-2, you're pretty computer literate, technology savvy, I think it's not a problem that you file your own tax return. There are plenty of softwares out there now. The government has mandated that all the software manufacturing companies provide a free product for those people to have those simple returns. I know we direct our clients to myfreetaxes.com, which will direct you through an H&R Block website, and you can file for free if you are under the income limit and have a simple return. And then you have programs like my program, which is the VITA program. The VITA program is, sponsored through the IRS. It's the Volunteer Income Tax Assistance, and it's free. So you can contact VITA programs such as Wayne Metro. We will prepare your tax return for free. Most VITA programs prepare all kind of returns, whether it's a W-2 return or self-employment. We run the full, spectrum of tax preparation services. But I think it's important that you realize that just every situation isn't the same. And the most important thing that I tell my clients all the time is stop listening to what your friends tell you about taxes. Just because your friend tells you, oh, you're supposed to get $3,500 per kid, it doesn't work like that. Tax situations are very intricate and in-depth. Every tax situation is different. Because someone got this amount on their refund and you think it's the same because you got 2 kids and they have 2 kids, it's not the same. So stop listening to your friends and just seek a professional. So whether it be a CPA, a paid preparer, or a VITA program, or you do it yourself, just seek the best advice and professional advice. And the last thing that I will mention is, Renee mentioned IRS.gov. IRS.gov is an invaluable resource. We talked about unemployment insurance and how it is taxable, and the tax implications this year are going to be great for a lot of people. A lot of people that are used to getting large refunds will not get large refunds this year because of unemployment, because it is not considered earned income. That will reduce your earned income credit if you get one at all this year in some cases. If you are married and you're getting unemployment and you have a spouse that works, you need to calculate how much withholdings you need to have coming out so that you're not surprised at tax time. And you can go to irs.gov. They have tax withholding calculators. They work. use those tax withholding calculators. Now, at this point in time, you're getting ready to file your 2020 taxes. It's too late, but it's the beginning of the year. So when you file this year, if you don't like what your tax situation looks like, you can change it and have that, have a positive effect on it for next year. So I implore everyone to go look at that. If you got unemployment and you did not get the taxes withheld last year, you need to change that. You can at any time you can, go to unemployment and change that and have your taxes withheld. That is taxable income. It is not free money. So
Yeah. You covered a lot of great points there, Troy. I just want to back up really quick to the VITA program because I don't want that to get lost in the shuffle. Can you talk a little bit more about that and maybe what some of the eligibility requirements are?
absolutely. So the basic eligibility requirement for the VITA program is that you have household income under $57,000. Okay. There are a few tax situations that the IRS deems out of scope for VITA, but typically, if you have income under $57,000, you won't fall into one of those categories. So if you have rental income, you have a rental property, and you have a tenant living in your rental property, that's considered out of scope for the VITA program. Certain types of cancellation of debts are considered out of scope. We don't know why, but they are. And if you're self-employed and you have either inventory or employees, you're out of scope. But other than that, we can prepare pretty much any return that you have. Our program this year is totally virtual, obviously due to COVID. So we went virtual when everything shut down mid-March last year. We were shut down for about a week and a half, and we rebooted back up 2 weeks later, and we're completely virtual. So everything is done contactless. We don't have any of our traditional sites open this year. So everything's over the phone and virtual. It's fast, it's effective, it's safe, it's accurate, it's good customer service. So reach out to us. You can go to our website at www.waynemetro.org, or you can call our Connect Center, which schedules all of our appointments at 313-388-9799.
And
Okay.
I just want to just echo Troy's sentiments about the VITA program. That's how I got started in taxes. I cut my teeth in the VITA program in college, and so that was my first introduction into tax preparation services. They do a really good job with training. If you qualify for it, that is definitely an option for you.
Yes, absolutely. I know that they were limiting the number of volunteers this year just because of COVID and everything that was going on. But I agree. I did it in college as well. And it was a great experience, and have been doing my own taxes and friends and family's taxes ever since, as well as teaching people how to do their own taxes. But I want to jump back really quick and ask Troy if you can put that website and that phone number in our chat so we can include it on in the comments for people. That would be great. And then I just want to recap what you mentioned again to make sure that our audience doesn't miss that. Generally, if you have an income under 57,000, and there are some caveats to that, but generally incomes under $57,000, you can qualify to have your taxes done completely free through the VITA program. Wayne Metro, which Troy represents, is one of the institutions that offers that. And we will be posting the website as well as the phone number in the comment section. So if someone is interested in getting their taxes done for free, they can reach out. And then another quick question, what type of information should people be prepared to show or bring in order to get their taxes done? So I want to talk through the VITA program, what they should be prepared for, and then Mr. Brown, if you can also address that, if there's anything different.
Absolutely. So to get your taxes prepared with our agency, you're going to need to have documentation pretty much for everything that you want on that tax return. So we do need to see your photo identification. We need to see social security cards for all the primary taxpayers as well as any dependents or anyone that's going on that tax return. So we need to see original social security cards. We need to see all of your income documentation. So whether that be W-2s, a 1099 SSA if you receive social security income, if you receive self-employment income, we need to see verification and documentation of that income if it's cash income. So if you don't get a 1099 miscellaneous and you operate a cash business, we need to see, your receipt books, ledgers, all, those kind of things. Just we have to have documentation for everything. Any expenses that go on your tax return, we're going to need to see those receipts and documentation for those expenses. That's the basic gist of it. AC, can you think of anything that I'm missing?
Yeah, no, those kinds of requirements are typically my requirements as well. And the reason why we ask for that is for we have to identify as a paid tax preparer and as a tax preparer period. You should be verifying identity. So the person that that they say they are it's who they are. So proof of identity, proof of income, because I try to tell my clients your tax return should be 100% auditable, meaning you will pass an audit if the IRS ever questions something. You have the documentation available, and we didn't make numbers up. It was based off of information that you provided. So if you have bank statements, if you're a cash business, then hopefully that cash went into a bank account and we could verify those transactions through bank statements, because that's what the IRS is going to really discuss. It's not necessarily about what you put on there. It's about what you can prove, what you can prove on your tax return. Because remember, the tax return is a reconciliation form. So you've already made the money, you've already expended the money. The IRS has been reported to the IRS in most cases. So it's reconciling the difference. You didn't have credits on your tax, on your work. You may not have claimed all of your exemptions on your with your employer. Well, if you only claim 3, but there's an additional person that goes on your tax return, that's a reconciling item. Mm-hmm. Or vice versa, if you claim 4, but there's 3 on your tax return, that's a reconcilable item. And you're required to reconcile that tax return every year.
And that's a good point. Could we maybe talk about that a little bit more? And Troy, maybe you can address this, making sure that the dependents, who you claim as living in your household, your children, making sure that you're only putting down individuals that are actually in your household, and some of the penalties that have resulted from people putting incorrect people in their households?
Yes. So everyone should know that in 2021, technology is to a point where these government agencies can talk to each other in an instant. So if you're claiming a child that does not live in your home, the Department of Education has records on that child's legal residence. DHHS oftentimes has documents on that child's place of residence. Other government agencies know where that child is supposed to legally reside. And if you give your friend or relative permission to claim your child because they would get a better refund because maybe you don't work, and they would get, a significant child tax credit, additional child tax credit, and earned income credit, and then they'll share a portion of that with you, because that's how the game goes. That's what people are doing. Just know that in, I would say, probably the last 5 to 6 years, it's almost impossible to get away with it now. Years ago, people did it, and the problem was rampant. The IRS has cracked down on that tremendously, and you will get caught. You will owe that money back, and you will owe that money back. Is it up to like 4 times that amount back? I believe it's astronomical. So if you get an extra $5,000 on your return, it's a possibility you could end up owing back an extra $15,000 when it's all said and done, because they're going to get that money back plus interest, penalties, fees, fines. Like it's not worth it. It's really not worth it. The likelihood of getting away with it now is so slim, and it's wrong. It's fraudulent. It's illegal. You can be prosecuted for it. It just don't do it. It's that simple. Don't do it.
Yeah, thank you for providing some additional information about that, because I think the more information people know, the better prepared they are and the better choices they can make in this upcoming tax season. And so just to circle back really quick, because we were talking about engaging a preparer. We talked a lot about the VITA service, the free tax service that's available. And I just want to throw out a reminder really quick. If the audience has questions, we will be answering those as we're going through here. So please post them in the comments. In selecting a preparer, whether it's in person or online, I just want to note that individuals can go to the IRS for a directory of preparers, because you definitely want to use somebody who's actually qualified to prepare your taxes for you, or use a platform, because you're putting all of your personal information into, if you're using an online platform, you want to make sure it's legit. So you can actually go to the IRS for a listing of preparers and online platforms to use, to make sure that you're using someone or something that won't, take your information and do who knows what with it, right? All right. So before we switch, is there anything else that you, Troy, or you, Mr. Brown, you want to bring up?
Yeah, just to add to the conversation, people who do it, for me, it's more or less your level of comfortability with your tax return. If you are comfortable with the tax return and preparing your own tax return, utilizing whether it's the IRS free service softwares, or if it's going through VITA, or if it's actually seeking out a paid preparer, it's all about your comfortability level. Just understand that if you prepare your own tax return, that's your responsibility. So you become 100% responsible for whatever is on that tax return. If you look for a preparer, they kind of share in that burden. But going back to something that you said, Renee, about selecting your preparer. So one thing that you can do, yes, you can go to the IRS.gov website and select a preparer from the IRS portal. You can go to your local or your state CPA directory, association directory, to find a CPA or someone with a credential. A couple of the credentials that you want to look for is one, a CPA, so a certified public accountant. You want to see, if you're not using a CPA and you have a tax professional would have an enrolled agent number. So an enrolled agent, so you're looking for CPAs, you're looking for enrolled agents. You're also looking for some tax attorneys, because there's some tax attorneys that do prepare tax returns. So if you're looking for paid services and you're looking for qualified professionals, those are the credentials that you're really looking for paid services. Even if you go to a third-party preparer, like an H&R Block or Jack and Hewitt or some place like that, typically they have as managers, people with those credentials. They're a CPA, they're an enrolled agent, they're an attorney. So the actual preparer may not be an enrolled agent, but typically in those types of processes, it doesn't get through the review. The reviewer is probably a credentialed tax professional. And one thing to avoid, and I see this all the time, I cannot tell you how many times I see it. You go to someone who's perhaps doing tax returns out the house, and they don't sign the tax return. So if you're paying an individual to prepare your tax return and they are not signing the tax return, if it says self-prepare at the bottom and it doesn't have the individual preparer name on it with their preparer tax identification number, their PTIN number, then you should not be paying them, because they are not assuming any responsibility for that tax return. It's as if you prepared it yourself, but you actually paid a preparer.
Yep.
Very good point. That's a very good point. And I'll add, in addition to using someone who has these qualifications, don't be afraid to ask questions. Just because you are working with an experienced professional doesn't mean that you can't ask questions. You know, if something doesn't make sense to you, ask questions about it, because again, as it was pointed out, you are responsible for the information that goes on your return. And so you want to make sure that what's being put on there actually reflects, you know, your situation. So
exactly. And I'll also add to that, before you sign your return and let someone transmit their return, look at that return. Because how I got into taxes is I went to a tax preparer, and you should always be weary of anyone that says, I can get you. In 95% of tax situations, if you take your taxes to AC or you bring your taxes to me, they're probably going to look exactly the same in terms of your refund amount, because he's going to do a legal tax return for you, and I'm going to do it. I'm going to do everything I can to get you everything that you are legally entitled to. When someone says, oh, but I can get you, that should be a red flag. How I started preparing my own taxes was I went and got my taxes prepared when I was in college. I came home for the winter, went to a tax guy that my mom's coworkers were all using, and he said, I can get you, $3,000 back. Now I'm in college. I barely made any money, and he did. He got me a couple of grand back, and I was just happy. I was 19 years old, didn't think any more of it. I went to him for 2 years. And the next year, I'll never forget, I had just come home for summer break and I was watching TV, and on Channel 4, I sat and watched the feds carry him out of Greenfield Plaza on the news. And I said, that's my tax guy. And for 6 years, I was paying the IRS back money because he filed fraudulent returns for me. And I signed my name on it, and I was still held responsible for it. So let that be a lesson to everyone. When you hear those words come out of a tax preparer's mouth, run the other way. Yep. Run the other way. Yeah.
Thank you for sharing your story. Yeah, that's a very painful and expensive lesson.
Yeah. So.
All right. So we've got a question that came in. And I want to make sure we address it, because I actually had this question at the end, but I want to make sure that we address it. So I'll go ahead and ask it now. For somebody who's filing their return, how long does it take to get your refund? And can you talk a little bit about the tax refund advance, or the rapid anticipation loan program?
Yeah. So can I take this one, Troy?
Go ahead.
This is candor, correct? This is community candor, so I can be really candid on this.
Tell me like it is.
All right. So this is the bane of my existence. So it's one of the biggest pet peeves I have is One, let me address the first question. The first question is, how long does it typically take your refund to get here? If you file the tax return electronically, typically it takes the IRS, once it's accepted, it will take, the IRS will tell you it typically takes about 21 days. Realistically, anywhere from 8 to 14 days if you file and you have direct deposit.
Yep.
Okay, so if you file electronically and you have a refund and you attach a direct deposit account to it, then it typically takes anywhere from 8 to 14 days. The IRS will tell you 21 days, up to 21 days, but that's what the IRS will tell you. So that's that. If you don't have a direct deposit account on your return, then it could take up to 28 days, and they have to send it through the mail. So if the IRS have to mail it, considering where we are today in 2021, do you want to trust the mail to get you your tax return, in 28 days? Likelihood is not. So if you file electronically, if you have access to a direct deposit is always the fastest way to get your tax return. Okay. Now, touching with the rapid anticipation loan, one, they will tell you that the RAL loan is the IRS banned RAL, the rapid anticipation loans. Mm-hmm. And the reason why they banned it is because back in 2008, when the Affordable Care Act was passed, the American Recovery Act, that's what it was. The American Recovery Act was passed. Congress disallowed tax preparers access to an individual's tax obligations. So now the tax preparers can't call the IRS to identify if you have an outstanding tax obligation. Tax obligations so if you have a refund, the tax obligation, and you have a refund and you're anticipating, but you owe the IRS or you owe some other entity, then that refund is going to be applied against that tax obligation. So that means you will not have a refund coming back to you. In the case of the rapid anticipation loan, what they said was, okay, we're going to give you a loan for 25, 28% interest, with the effective rate is like 300% interest, in anticipation that you're going to get this refund. So you got a refund, you're expecting a refund of $2,500. After they process the loan, because it is a loan, they process the loan, you pay a loan fee, you pay an origination fee. Okay, and they're taking that all out the refund. So you were going to get $2,500. You sign up for the anticipation loan with the fees included, you may get $2,900. So that's $600 in fees that you have just paid out. And if you had waited 2 weeks, you would have gotten the full refund, etc. But let's say you got the loan, you took the $1,900, but the IRS took the refund. Let's say they took the refund. Now you're on the hook for the $2,500 that you could have gotten. So, and you have no way of paying it back. So that was one of the reasons why they banned the rapid refund. But now what some companies are giving you is like $700. So they'll give you a $700 advance. But understand that advance, you're still obligated for that. And if you have an outstanding tax obligation that you may not have known about, you're going to have to pay that back plus whatever the IRS took.
Yep.
So be
So it's
wary
like,
of that as well,
yeah, stay away from that if at all possible.
if
Right.
at all possible.
Predatory service.
Absolutely. Just like a cash advance,
Yep.
cash
Same-
checking, same
same
thing.
Yep.
So I just want to, I know that you've got a hard stop at 1. So I want to jump into your section really quick. But before I do that, I just want to throw out a reminder. If there are any questions from the audience, please put them in the comments. We will address them as we're going through this discussion. And also, if you haven't already filled out the participant survey, fill that out. It's in the comment section. We'll be posting it again and showing it on the screen. But for everybody who fills that out, you'll be getting a special gift. As well, there will be a drawing, and one individual will receive up to $125 to cover their tax preparation services through Mr. Brown's
It's
organization.
Donnell Financial Services.
So make sure you fill out that participation survey. Again, the link is on the screen and it's posted in the comments. And we use that information to make sure that we're addressing your needs. We're providing the information that you need, and you can also tell us if there are other subjects that you want us to cover. So please fill that out. That's really important. All right, so moving on, we want to talk about this upcoming, tax season, what people should expect. Are there any changes? Anything that people should be aware of when they're filling out their tax forms? AC Brown.
Yeah. So, the biggest thing is the recovery rebate or economic impact payment, right? The stimulus, right? So how is the stimulus going to work out? One, let me tell you what that economic impact payment was. It was an advance of a tax credit that was anticipated that you will get on your 2020 tax return. Now, the IRS used for the first round, they used either your 18 they used your 19 tax return or your 18 tax return if 19 hadn't been filed. Okay, so they based the refundable credit off of prior information. Okay, so they gave you that in advance. In the second round, they did the same thing where they increased that refundable credit to, but you had to have filed your 2019 tax return. So if you got a stimulus payment, that is a refundable credit. That is not taxable income. And you do not have to pay that back. Let me dispel that myth. This is not taxable income that you have to pay back to the IRS. This is an advance of a refundable tax credit that they used based off of prior information. Now, when you file your 2020 tax return, you will have to reconcile that. But let's say you got, let's say you got a credit based off your 2018 tax return, but your child is in for 2020, your child is no longer a child, they're a dependent. So they're no longer 17, under the age of 17. You got a child tax credit rebate for that. Even though you got that tax credit rebate and the child aged out of the child requirements, you still will not have to pay that money back. So that is an advance of a credit based off prior information. And when you file your 2020 tax return this year, that you will have to report that you received your economic impact payment. Now, if you did not receive your economic impact payment, your stimulus payment, you will get your credit on your 2020 tax return. The IRS sent out about 80 to 85% of the second round of stimulus payments were made either direct deposit or cash card or check. Okay, so that means the 20% of eligible recipients will probably get their stimulus on their 2020 tax return. Okay, so I do want to say that that's a hot topic that I've been answering questions about. That's a hot topic issue. Another hot topic issue is, what do I do with unemployment? We talked about it earlier. You know, that extra boost that you got in unemployment. It's still unemployment. So you're going to have to report that income on your 1040 this year. That's a requirement. So unemployment, if you had taxes taken out, you know, that'll be reported. If you didn't have taxes taken out, you could be in a financial situation where you owe taxes on that money because it is taxable. Okay, so I do want you to understand that. Another caveat, because Troy talked on this earlier about the earned income credit, and so what the new laws talked about in what the CARES Act. The CARES Act allows for people who would have normally gotten a earned income, but because they were unemployed, that's unearned income. The IRS is allowing people to, for EIC purposes, to go back to their 2019 tax return and use their 2019 income tax information for the EIC only. EIC or child tax credit. So if you were unemployed or you lost your job, you were on furlough, etc., and you normally and you're kind of concerned of whether or not you'll qualify for that earned income credit, we can actually use your 2019 tax return and those income items for claiming the earned income credit. Okay, so that's another big topic issue when it comes to changes. Another change that I think is noteworthy, the charitable deductions. So normally you would have to itemize your tax return in order to claim your charitable deductions. Okay, in 2008, under the Tax and Jobs Act, they increased the standard deductions, and so it made it more difficult to itemize if you were single or if you were married filing joint. They increased the standard deduction. So most people started, just using the standard deduction. Well, for 2020 and 2021, the IRS is allowing up to a $300 charitable deduction above the line, meaning you're going to get that deduction before itemization. Okay, that's a $300 deduction. So if you gave to charity, you can write off $300 if you're single, $600 if you are married filing joint. And if you are in a itemized situation, you can it used to be capped at 50% of your adjusted gross income. Okay, so if you made $100,000, your adjusted gross income is $100,000, you could claim up to $50,000 in charitable deductions. For 2020, that 50% limitation has been eliminated. But what they did say is that they are going to have more stringent penalties for people who abuse that. So it's important that you gather your documents for your charitable deductions and report them and give them to your tax preparer so that you're accurately reporting your charitable deductions. So charitable deductions, the stimulus, unemployment, EIC, those are major changes in the tax law. And the last thing, because I know we're getting low on time, but the last thing is really hot button topic issue was if you were affected by COVID and you decided that you wanted to pull from your IRA or your retirement account. If you're under the age of 59 and a half, you used to have to pay a 10% early withdrawal penalty. if you withdrew your money from your IRA in 2020 and you were impacted by COVID-19, whether you or anyone in your household, so you or anyone in your household was affected by COVID-19, you don't have, and you're under the age of 59 and a half, you will have that 10% tax penalty waived, and you are eligible to divide that income, because that is taxable income. You are able to spread that across 3 tax years. So case in point, if you withdrew $30,000, you don't have to pay the 10% tax penalty, and you can, for 2020, report $10,000. For 2021, report another $10,000, and then for 2022, report another $10,000. So you can spread that income across 3 years instead of taking the financial hit in 1 year like you normally would have to. Those are hot topic items I've been talking about since the CARES Act passed. So yeah, there we go.
Can you also talk about the impact of investment accounts? So we know that last year, the number of individuals who opened up investment accounts, maybe through an app on their phone, Robinhood or some other, Bitcoin, especially in minority communities, the amount of individuals who now have investment accounts has increased exponentially. How does that impact the filing of your tax return?
Sure. And for all intents and purposes, for more, if you need more information, you want to reach out to me directly, info@thejohnlgroup.com. info@thejohnlgroup.com, all one word. Reach out to us, and we can certainly talk about your personal things. But to answer that question, so you have short-term gains and long-term gains. The tax implications are this: whether you open up an investment account, if you purchase stock, and let's say you purchased stock in February and you sold that stock in December, if you sold the stock for more than what you bought it for, then that's a gain. That's a short-term capital gain, and you're going to be taxed at your individual tax rate. So there are some tax implications for that. The same thing with Bitcoin, etc. If you purchased it and you sold it, or you used it and you did it at a higher price than what you bought it for, if you sold it at a higher price, there's a gain on it, and that constitutes as a tax. You have to include that as taxable income. If you held on to your information, your stock, let's say you bought it in 2019, in December or November of 2019, and you sold it in December of 2020, you have a long-term capital gain because it's longer. You held the asset longer than 12 months. So at the point you hold it longer than 12 months and then you sell it and you sold it at a higher price than what you paid for it, that's a long-term capital gains. And in most instances, people either don't have to pay any taxes on that long-term capital gains, or you're paying 15% taxes on that long-term capital gains. There's some income limits, but for the sake of time, that's typically what we're looking at. If you sold an investment for more than what you paid for it initially, then that's a gain, and you're required to report that, and there may be some tax liabilities attributed to that.
Thank you. And just for clarification, people don't have to calculate what that is. They'll get a 1099 that speaks to those gains.
They'll get a form, yeah.
Okay, great. Thank you so much for going through that. That was a lot of information, but I believe that the audience got a lot of great tips and information. And if there are additional questions that individuals have, we have posted the contact information for Troy, Milton, and Wayne Metro, as well as AC Brown. at the johnlgroup.com, how you can reach him. And just a reminder, if you want him to prepare your taxes, make sure you fill out that participant survey, because we will be doing a drawing and providing some funding off of your tax preparation services. So just a reminder on that. Moving on.
I will say this, I do have to drop off, but I enjoyed the time I spent with you all today. Troy, you're doing an excellent job at Wayne Metro. I can tell you're very versed. Renee, it was a pleasure meeting with you. I look forward to working with you in the future. To the people who are listening, please take what we said to heart. And, do your research yourself, research your tax preparer, know taxes, because that's what you're responsible for. That tax return, anything that's reported to the IRS that you signed, you're responsible for. So with that, thank you.
Thank you, AC.
All right.
Pleasure meeting you.
Just having a bad Wi-Fi day today. My system keeps going in and out. But we thank you all for joining us. And I just want to take this time to wrap up, because we covered a lot of information. And we do want to make sure that everybody has a successful tax season. And before we summarize, we do have one last question. Troy, if you don't mind. We talked about this a little bit early on. If somebody is missing a tax return, they were supposed to file, it was a couple of years ago, what should they do to get caught up?
The first thing they should do is the first thing they should do is get their documents in order. So if you still have your W-2s or whatever income and expense documents you have for that year in particular, round those things up. If you do not have them, you will want to reach out to either your old employers. If you can't reach out to them, reach out to the IRS and request a wage and income transcript. Now, the thing with the wage and income transcript is this: when you take that somewhere to get that tax year prepared, they're only going to be able to prepare the federal return, because it's not going to have state information on it. So if if your biggest concern is the IRS, then that's fine. You can get the wage and income statement, and then you'll want to contact a tax professional. So you can contact a paid professional like AC at the John L. Group, or you can contact us at Wayne Metro, a VITA program, and there are several out there, or any other paid preparer, whoever you choose to, and they can prepare that return for you. AC mentioned things like applying for loans, for like home loans, things like that. They're going to want to go back, a few years of tax returns. So a lot of times that's why people will have to go back, because they didn't file. So so you want to get those documents in order, and then contact a tax professional and realize that you may owe. A lot of times, more often than not, someone didn't file because they probably knew they were going to owe in that year, and just go into this process knowing that you're going to owe, and it's going to be lots of penalties and fees added on to what you would have normally owed. So if you, in 2017, you went to your tax preparer to prepare your return, and they said, oh, you owe, $1,200 to the IRS, and you said, I'm not going to file, just know that $1,200 now is probably close to, it's a lot more. I'm not going to put a figure out there, but it's going to be a lot more than $1,200 was back then. But you've got to do it. That's what we talked about before. You're going to pay it one way or another. So just, get your documents ready, and do know that you can always call the IRS and make payment arrangements if you do owe. That's always an option out there. There's a fee now to start a payment arrangement. I think it's somewhere around $25, but that's always an option. People get that tax return and see that amount, like, oh, I owe $2,000 this year. Well, you can make a payment arrangement to pay that back. And the IRS is very flexible with their payment arrangements. I've seen people have $20 arrangements, just keep it, stay up to date on that arrangement, and you won't have any problems from the IRS. They'll work with you.
Yeah, thank you. That's a very good point. And so, just wrapping up, we've covered a lot of information here. Feel free to go back and view it. Feel free to reach out for additional assistance to Troy or AC Brown. Key things to remember, gather all of your documents, figure out how you're going to file, and make sure that you do it with a professional. And you can, check with the CPA directory, irs.gov, or even work with the tax attorney to make sure that you're working with someone who's qualified or using a platform that is endorsed by the IRS. You can go to irs.gov for additional information on anything that we discussed today. And do you know, one quick question, Troy, when are e-file returns going to be processed? Do you know what the starting date for that is?
I do not know the exact date yet. I
Okay.
don't.
All right, so to be determined, but it's probably by the end of the month, would you say?
Yeah. Oh, yeah.
Okay.
And
So
then I'm pretty sure that those EITC and some of those other credit returns with credits on them will be delayed even farther. Usually the last few years they've been holding off to the second week in February before they process those returns.
okay.
So.
And EITC is earned income tax credit, just for anybody tuning in. So Troy, any last thoughts you want to leave with the audience?
No, just don't fear taxes. But don't try to cheat the system, because it rarely works in your favor. Do the right thing. And I also wanted to point out that there is if you are in tax trouble, you owe an exorbitant amount of taxes, and you don't have the ability to pay, and you're behind, you can contact the IRS, and there's the taxpayer advocate, and they work for their IRS representatives, but they work on behalf of the taxpayer, and they can walk you through some of those processes in terms of like filing an offer in compromise or something like that. So there's help out there. You just have to reach out to tax professionals or to the IRS, and they can point you in the direction of getting that help.
Okay. All right. Thank you for your time today, Troy.
Thank you for having me.
Thank you to everybody who joined us. Again, please don't, keep this information to yourself. Please share it, with your friends and family. If you haven't already, please fill out the survey that you see on the screen there. That participant survey gives us information on letting us know if the resources that we're providing are helpful and what other information you might want to have access to. Also, we're sending something out, a gift to everyone who fills it out, and doing a drawing for one person to assist them with the fees to have their taxes prepared this season. So thank you for joining us. Keep in mind on the 27th, 2 weeks from today, we will have our next session entitled New Year, New You, New Ways to Save. It's going to be a great session, lots of information. Look out for that event posting on our site, and Happy New Year to you, and take care.
Bye-bye.